actually, 30 minutes of trade. But let's move on and invite the next corporate on Bazaar today. Now, Goldman Sachs is bullish on KPIT Technologies. The company, KPIT Tech, recently bagged a $100 million deal from Renault, and Goldman Sachs says it was done at premium pricing. They also see the visibility of a sustainable period of high organic growth for KPIT Tech. Kishor Patil, the co-founder and managing director and the CEO at KPIT Tech, is now with us on the show. Morning, sir. This is Rima here. Could you tell us the extent of premium pricing from this Renault deal? And is this something that is happening across the other deals that you are winning?
I think, so good morning, and I think this was a discussion with Goldman, and naturally they have interpreted what they have interpreted. We generally don't comment on any specific deal, any specific client. Basically, the question was, with the current economic environment, is there a pressure on the pricing of your client, and how the current deals you have got is whether it is lower than the average prices. Now, many of these deals, so in that context, we have said that in case of competition, where KPIT is in a position to keep a certain premium over competition in all the deals, and that's how it was mentioned, and that's how it is interpreted. But to your point, we continue to see that clients expect and understand these. Many of these projects are quite complex. These are quite require a different kind of a mix of people, and so they are ready to really provide a certain kind of a higher pricing on specifically the key technologies as well as the key projects. So that is how it is. So, and we see that as an overall scenario, not specific to any specific client.
Right. No, Mr. Patil, so what you're saying is that relative to your own orders earlier, this is not some substantial premium, right? But this is not you don't have to take price cuts as well. So work is coming at profitable rates. That's what you're saying. So
there are 2 points I'm saying. First is, in the current situation, people say that whether do you have to take price cuts or for any large deals whether you have given any price. So that's where we are saying that we have not given that. The second thing we are saying is because of the KPIT's positioning and this, we have been in a position to maintain a certain premium over competition when we win the deals. That's the generic this, and it is not only in a specific to a client, but it is generally across the clients. That's what I would say.
So you're saying there are no price cuts, but I just wanted to ask you, not particularly for KPIT, but can you give us a larger sense of what's happening in the industry? Are you seeing more deferrals of client orders? Are there larger delays in terms of timelines? Because, there is this impending recession that everyone's talking about. So what is the situation on the ground currently?
Yeah, absolutely. The fact is there is a pressure and people are cautious, I would say. People are very cautious in terms of which projects they need to spend in order to remain competitive in future, and they have to naturally cut the cost. They cannot just do it at across the make the investments across. So I think certainly we are seeing that the allocation of more and more spend to the new programs and new technologies, specifically in SDV, and the new production programs which are in 25-26. So there are better allocation for those programs. That's what we are seeing, and for the automotive industries. And certainly they are looking at a more, if I have to say, cost-effective, more productive way of doing it. Naturally, what it means is if you are more productive, you are in a position to, improve your realization, and it is also saving to the client. And so that is the situation currently. So overall, I do see that overall spends will come under pressure, but automotive spends for SDV remains intact. And that's what our read is talking to the clients.
Mr. Patil, to be fair, Goldman Sachs did say that this Renault deal was won at a premium pricing to the closest competitor. So they did, mention that in their report. So are there more such $100 million deals? Because you seem to indicate that even if things go bad from a macro point of view, the demand for software-defined vehicles in the automobile space, that demand remains intact and resilient. Can we see more such $100 million deals? Are there in your pipeline? If yes, how many?
So the first thing I may say that we have a strategy of a T25 as we call, and out of in T25 there are about 8 to 10 clients which are, I would say, significant size of OEM, and they all have the similar spend, and KPIT will get the fair share of them. Now some of them do take and go ahead with a one-time full deals like what Renault did, and it was very appropriate for them. We will certainly see maybe another one or so, or maybe more in future. I don't know, but at least one or so we see, which we can get. But rest will grow, and there may not be a deal, but the opportunity is the same.
Okay, Mr. Patil, just, give us a moment. We want to talk about the new listings. The landmark car listing has been very weak, down almost about 10 odd %. Barn Holdings as well has been, on the weaker side, down about, I think, 13% now. So both the listings have been total dropped out today. Barn Holdings now down 14%. For Landmark, I think the issue really was that the stock is valued quite expensive. So there's no real valuation headroom if you look at it. It's almost at 29 times PE as per FY22. So that is one problem. The other thing is this large concentration. I mean, it's a premium auto dealership, as we know. There's a large concentration of its business in just two places, Gujarat and Maharashtra. And of course, the entire, auto space has not seen as good a recovery as we were perhaps expecting. But we'll get back to these new listings in a bit. Mr. Patil, thank you for waiting by. I wanted to understand a little bit about your own guidance. Do you stick to it, the revenue growth of 31 to 32%, margin band of 18 to 19%? I'm asking because is there a possibility that you may have to scale down the guidance in the second half of the year? We saw large companies like HCL Tech do it mid-quarter, despite sort of having a very robust outlook, at the start of the quarter. Your thoughts?
Yeah, so I think, as I said, in the area in which we are working, this is how we see the micro environment, and KPIT is very well positioned. It is re-emphasized by the fact that some of the deals like Renault, and as I said, or the pipeline we have, and we will see certain closures over the next couple of quarters. So based on that, it gives the confidence. Anyway, this 32% we have just given recently, and we are very, we are comfortable with that kind of a guidance, and we'll be in that brand.
So for the T25 clients that you focus on, could you tell us what are the budgets looking like for calendar year 2023? How much higher, 5%, 10%, or are they flat?
So the way I would look at it is their investment into technology and software budgets, which typically is growing by about 8 to 10%. And even if they scale it down, it won't be more than a couple of percent. They won't scale that down. So that growth in that kind of a area, new area, will remain. Naturally, they will scale down on the other type of expenses in the traditional technologies in the old production programs. So they will cut down there. But in the new technology area, basically we see anywhere between 7-8% growth in the next few years.
Okay, all right. So you're saying as of now, you're comfortable holding on to that guidance and you don't see any reason to scale it down even mid-quarter?
Absolutely.
Okay, all right. We'll leave it at that. Thanks a lot for joining in. And, speaking about the business, IT spends are definitely under pressure, and you can see it in the stock as well. KPIT Tech is now down almost about 4.5%. But to be fair, it has been one of the stronger mid-cap IT companies purely because of its focus on auto tech. But we also have the two new listings that should come up once again for you. It's almost a 10 to 13% slide that both those listings have seen. Not a good day at all. In any case, market is also under pressure. Landmark down 9.5% and a Barnes Holding down 12%. Let's slip into a quick break. Good time to get our technical experts on board. Mitesh Thakkar will join in for some technical trades. Stay tuned.